big listing today. The South Korean auto major Hyundai makes a lackluster debut on the exchanges. It lists at a discount of about 1% over its IPO price of around 1,960 odd rupees. Our colleague Parikshit Luthra caught up with the top management of Hyundai and began by asking him about how they see growth going ahead. Listen in.
We have a huge aspiration for the IPO because IPO is for our growth. That growth is with sustainability. And this is also we expecting growth to be with our investors. India market is fascinating, and we see this market is really fast growing. And that's why we put the highest strategic focus on here, which means we need a lot of investment with the importance of the proprietary prioritization of our strategies. But to drive this our investment, we need to have the leverage, the capital market as well. So that's why we set up the equity participation in the market, and we'll use our full commitment. We do execute our investment based on our plan.
Right. Any thoughts on why you chose this particular timing?
Yeah, because I think we believe this is the right timing. We've been watching this market as we have been here more than 28 years. Yeah, and I think this is the right timing for building up the momentum. Yeah, because we are expanding our capacity. We build more capacity, and we are also extending our product portfolio. And the R&D investments is what we are putting out the best of our focus at this moment. And more than that, beyond mobility, we are also thinking how we can contribute for the energy sector. Well, those are the reasons why we select, and we believe this is the right timing.
Right. One question that a lot of investors are asking is, what does Hyundai India actually get from this IPO? Because this is an OFS with all the $3.3 billion in proceeds going to the parent entity. So what does Hyundai India really gain out of this?
Actually, this is a secondary offering, and the sharing out the parent's company, Hyundai Motor, the Korea. So that's why we expecting the cash, the capital, that flows into Korea. But definitely, we will reinvest those the raised funds, because we already committed our investment earlier this year. We talked to the local government, Tamil Nadu, and at that time we already confirmed that the 200 billion, the Indian rupee, is already committed. And also based on our the future investment plan, not only just for the the IPO raised funds, we definitely need more the capital to be injected for the growth of India.
Yeah. Right. One question that I'd like to put to all of you is that we saw the stock opening in the red, flattish opening, so to say. Was this a disappointment? How would you address this drop in the price at which the stock opened? How would you address that, Mr. Chang and Mr. Garg?
I think we see the potential, and we believe we can have the more longer-term view, because as we talked about the investment plan and our solid product lineup strategies, I think we can gain our future position more robust. So that's what we can deliver to the market. Yeah.
Right.
Maybe,
as management, we'll focus on the performance, on pursuing growth, quality of growth, like what we have mentioned as our part of our strategy. Of course, the price will always be decided by the investor. But I think single-minded focus on how to take the company forward, as President and CEO Jay also mentioned, I think that is going to be the goal.
Right. Mr. Kim, how would you address investor concerns if you had to give us a sense of the long-term commitment and how you will build the brand in India now over the next 10 years? How would you do that?
Our business model is built for long-term success. We have several focus areas in terms of sales. We are pursuing the quality of growth, focusing on profitability and the volume with our prominent product pipeline and healthy dealer sales network. In terms of a brand, we want to be a home brand, the most trusted brand in India, by implementing some India Connect marketing activities, various CSR initiatives. Also, we are focusing on the customer first, service number one. drivers. And then in terms of the electrification, we are developing an EV ecosystem. We are planning to launch 4 EV models, including Creta EV, for this financial year. Also, we are localized our full EV supply chain. Also, we are investing in infrastructures. And then we are focusing on the export. We are positioning HMI as a production hub for emerging market. So we have a very healthy and balanced domestic and export mix, so which give us not only profit, but also it give a natural hedge against some market fluctuation there. We have a strong long-term strategy.
Right. When you speak about volume growth, Mr. Garg, what kind of volume growth are we expecting in FY25, FY26 and beyond?
Look, if you see the CAGR for the Indian industry, whether you take a 5-year period or a 10-year period, it has been about 5% in terms of volume. However, what is more important is how the average selling price has been going up. Like we mentioned earlier, we are pursuing that quality of growth. So volume is, of course, very, very important. But at the same time, the average selling price is important. The premiumization is important. Because India, if you see, is at the cusp of that growth. Because car penetration is low. At the same time, the per capita income is going up. People are wanting, the key buying decisions have changed from earlier only fuel efficiency or the price of the car to the design of the car. And that is where I believe Hyundai steps in. So we believe with the addition of capacity, which is almost, if you see, 30% capacity addition is happening for HMI in the next 3 years. And this is after a gap of more than 10 years. So I think this is a big moment for the growth of HMI going forward. And we believe that, yes, not only in terms of volume, but this strategy of premiumization, the strategy of adding features, and then, meeting the expectation of the customers will help us to really sustain the volume as well as profitability.
But any numbers that you could give us, any percentages?
Look, future guidance is always, we resist from giving a future guidance, but we believe that we are in a position to really, grow in line with the market in terms of volume and, of course, always in terms of average selling price to continuously go up, because the product mix is continuously changing towards SUV and the higher trim percentage is continuously going up. I'll give you an example. Higher trim percentage was 14% in 2019. Now it is 23%. Because we are adding more and more features. ADAS, we saw the highways being made, and today 8 out of 13 Hyundai models have ADAS. And the penetration has reached 29% in these models. So I think the opportunities will keep on coming. Infotainment is becoming very important. Software-defined vehicles are becoming very important. So HMC's strong prowess and R&D capabilities in these areas will help HMI to really leverage these opportunities.
Right. What would be your 10-year vision for Hyundai in India? You have 1 EV in the portfolio right now. You'll add another 4 by 2030. If I were to ask you about your vision for Hyundai India in the global scheme of things, Mr. Chang, what would that be?
Well, in terms of the production capacity that we are going to build, India should be one of the most important production the hub for us. To enable this, we also need to invest more and focusing on the R&D capability. Thus, we are setting up the production capacity increase and also R&D reinforcement. Those are the 2 main pillars that can ensure the growth. But if we especially focus on the EV, I think we believe that India is also, thanks to the government, the very strong the aspiration for the decarbonization. I think this is another the momentum that we can build together with the steady government policy, with the consistency, and also infrastructure, where we also need to invest as well. Yeah, and also, I think infrastructure building together, well, those are the things. The most important, the theme, strategy pillar for us as well.
All right, the management were so positive about the prospects of growth and the offerings that they have over the next few years for the Indian market itself. That's an exclusive coming in from Hyundai Motor. The street, however, awaiting better entry points for the stock price itself. That's the word that has come in from not just the management, but, if you look at some of the analysis that we've heard from the experts this morning and all through the period of the Hyundai Motors IPO as well. We take a short break. On the other side, we have another management joining in. PJ Nath, the MD and CEO of Nelco, will join in to decode their second quarter performance.